So right away, we're going to get into a daily chart here. We're looking at NQ. So today is Thursday, 27th of August, 2026. And you can see we are trading around 29,444 now. I've been looking at this inefficiency here for the past like 2 weeks or so. Today is Thursday, this one Wednesday, Tuesday, Monday, last week Friday, Thursday, Wednesday, Tuesday, and Monday. So as we are trading lower here, I was expecting price to trade into this inefficiency here and the midpoint of this week. So we had that run here on last week on this was Monday, Tuesday, Wednesday, Thursday, and then we got into this inefficiency here. So Friday we had an inside day. I talked about this here, but trading on the upper portion of this inefficiency, and then I talked about these relative equal lows here. So we open up on Monday, we have weakness, we trade into this Friday's low, and together with these lows here, beautifully into these lows here. And then yesterday's price action, it was not really, not yesterday, but Tuesday price action, we had an inside day, very bullish price action. I'll look at that on the 1 hour. And then yesterday's price action, I was looking at some relative equal highs. I'll look at that again. I was looking at relative equal highs, but we had a very high resistance liquidity run because of the movement in Asia. And then going into the market on close macro, we had a run here, and today we've opened up with the new day opening up here on top of that daily buy side imbalances and efficiency. So I'm going to go to a 5-minute chart, and then we're going to look at the kind of momentum that price is trading in. We might run over this in the opening gap, or we might continue with the momentum higher. So we're going to look at what price does going into this session. So we are 45 minutes past midnight New York Open. That is 45 minutes past 7 my time. And if price trades higher, I'm going to mention this, then we're going to go to a lower time frame. If price trades higher, then I'm looking at this high here. This was this is Monday, Friday, last week Thursday's high, and that high is 29,601, 601.1, and we've already made an Asian high here at the half. This candlestick here is 29,588.8. So that 588 and that 601 level, those are relatively equal. So if we have a very bullish momentum on the daily chart, then we're going to be headed into this sell side imbalance, buy side inefficiency. It's the opposite of this basic here. So we're going to be headed into that. And if we find support on that inefficiency, then the buy side here plus this relative equal highs, and that is the long-term bias on price action. So with that out of the way, we're going to go to a 1 hour chart. I'm going to speak something about this here, and then we're going to drift down to a 5-minute. So 1 hour here, you can look at what we did here. Yesterday I was looking at these relative equal highs for Tuesday's high right here. I was looking for price to trade in that direction, but we had a very long consolidation here before time drifted into New York session open, and it opened right here, around right here. This is 3 and this is 4. This is a 1 hour chart. So this is the New York open here. You can see we went higher. Look at the reaction here on the upper portion of that daily inefficiency that I've been looking at. We swing lower, and then it starts it way up into that high, and then we trade above that high going into the market on close. So we've opened up at 0 GMT today here. We've ran all these highs, and the next order of business that I've talked about is this last week Thursday's high right here. These are too smooth, so I'm gonna be expecting price to trade into that 601.1 level right there eventually. So going lower to our 5 minutes. So I'm going to talk a little bit about what happened yesterday, and then we're going to be looking at what we have here. So if we look at price here yesterday, let's minimize this chart. I was looking at this inefficiency here. We had the midnight New York opening price right there at the Monday's opening price, and then I was expecting price to find support on this inefficiency, then trade into that new day opening gap. But we went through that inefficiency, and I was very skeptical about buys here. So you can see the consolidation here, very rough consolidation. I talked about this inefficiency here. We traded lower into that inefficiency. We had this swing higher here. This is a nice area where you can look for buy. You can see the run here back into that inefficiency, and then it finds again weakness, trades back into these two inefficiencies here. Very difficult price action here. It's not really trying to go anywhere. And then this candlestick here comes on the New York session open. That is 3:30. That is 8:30 a.m. the New York session. And then they take it lower below these smooth lows back into this range here. I talked about this range here and why it was important in yesterday's price action, and why price was not really willing to trade into this height. So this is a short-term premium here. So they price it lower into a discount, and you can see the reaction from that discount. This is like optimal trade entry of this range here, and you can see the reaction on that OTE2 optimal trade entry, that is 9,069.1. Look at this level here, you can see the reaction there. So they buy it at that discount, take it higher into that new day opening gap, and the upper quadrant of that daily inefficiency. This is the midpoint of that inefficiency. You can see the reaction here, right here, and then you can see the reaction trading back into the new day opening gap, just like I was expecting it to do here, but time is of more essence. So this is what happened in New York. After trading into this here, they dump it again once more, and then it trades back into the new day opening gap. Again, they dump it. Very if you really don't know what you're doing here, you can really get chopped up here. So they take it higher into the new day opening gap, and then you can see the reaction there on the new day opening gap. They price it low into the midpoint of that daily inefficiency. Let's look at that price point. That level was around 29,111.1. This is the midpoint that I'm talking about of this inefficiency, this daily inefficiency here. I don't know what this chart is really difficult. So you can see the reaction here. Last time they retest that level, and then they price it higher, trading into these relative equal highs here from Tuesday, and then right now we've opened up with a new day opening gap. Very huge new day opening gap, traded higher. We have our Asian high right there, and then we've had this swing lower trading back into that new day opening gap. Interesting, right? So for today's price action, let's look at what we have here. We're going to be studying this new day opening gap, and this new day opening gap, you can see the midpoint is the top of that daily inefficiency. The midpoint of that new day opening gap is the top area of that inefficiency. That new day opening gap here is highlighted in rosy brown, and then that daily inefficiency, which is here also, is right here annotated in that cadet blue. Let's extend this a little bit. So we're trading lower back into this new day opening gap. We've not fully traded into that low. So if we're gonna be bearish like this here, then I'll be expecting price to trade into this low here and fully trade into that new day opening gap low. So from the 1 hour chart, we are bullish, but if you look at this momentum on the 5-minute chart here, it's suggesting that we are bearish. So we're gonna be looking at this low here as the sell side. We're going to be expecting price to trade into this sell side here, 0.1, and because it did not fully trade into that new day opening gap low, so we're going to be expecting price to trade into that low. So this is sell side. And now we have the midnight New York opening price, which is right on this candlestick here. So we're going to be annotating that price point also. This is what, again, I've said this before, this is what I do every day. And because this session has very nice runs on liquidity, I prefer it more than even the New York session because it's not really as volatile as the New York session. So that is the midnight New York opening price. This is the low that was formed in Asia. That's the Asian low. So Asia opens up at 2, and this is 235. That's 205, 155, 205, right here. So Asia opened up here to the lower, had this run above that high here, and then you can see the swing trading lower back into the new day opening gap. So we trade into that price point here, and then we have this retracement back into this range. So this range is important. This is the Asian range. So we retrace back up higher, trading back into this inefficiency here. There's a CB here. So there's a reaction from this CB. And if you note that CB is at the midpoint of that range. So we're going to notate that as olive drop, then extend this out to say 935 right there, and we're going to be notating the midpoint of that range. And you can see the midnight New York opening price is exactly on the low of that inefficiency. That's not by coincidence. That is not coincidence. So that is the midpoint of that gap. And that level is supposed to be dark gray. So there we go. So we retrace back into that gap here. You can see we go through it, and then we start trading below it. Midnight New York opening price here. We trade higher. You can see the reaction on the midpoint of that gap, and then we start trading back into this new day opening gap. So we can see the bias here is bearish. Price is trying to trade into these lows. So the time right now is 7:57. So we've had that 750 macro come in, and it has started here. So we're trading on that new day opening gap high. So we are meeting with around 3 minutes, and this 1 hour candlestick is gonna close, and then we can expect um, price to draw down into this sell side. So I'm watching the reaction on the high of that new day opening gap. If it wants to trade into the low here, I want to see them push price lower from that level there. And I don't want to see it get back into this inefficiency because we already had the reaction here trading lower. And now the whole of this movement here from yesterday's close, trading into the 0 GMT open here and making this new day opening gap. I want to see it. I want to see price retrace through that range. So let's look at a 15-minute chart from this here, and you can see the gap here. We run higher, and then we trade back into that gap. Price tried to go higher here, retracement, and now we're down right here to 9,436, around 435. So I've talked about what I want to see here. I want to see price draw lower, trade into this sell side because of the new day opening gap here, and because of this low here, it did not trade into that low, and then we have this retracement here, and now I want to see it trade down into this one. So we're remaining with less than a minute, and then this candlestick here is going to close, and then we can see the reaction and the new 1 hour open. So if price does not really want to trade into this low here, I want to see it start to draw higher back into this inefficiency here. But for it to do that, we must get a reaction from that new day opening gap. So that price point here is very important in the way price trades here going forward. So we've opened up that 750 here. You can see the reaction. We traded lower, and this is 755, a very small up close candlestick, and now this is 8. That new 1 hour has opened, the new 15-minute has opened. So let's see what the price has an interest of drawing down into this area, at least the top level of that daily inefficiency, and that level is around 29,394. Let's say 29,400. So that's 399. The exact level is this daily low, and that is 399.4. So that's that 400 level. Right now we're trading at 430s, so I want to see it drop down into 400. So from 430 we've had that 4-point drop, and now it's 6 points, 7 points to 424, around 423, and it's 421 now, 425. So this is the draw liquidity, the high of that daily inefficiency shaded in colored blue, and then the sell side down here. So I want to see it trade through this new day opening gap. This new day opening gap, I did not really want to annotate the upper quadrant. You can just eyeball this here. So that opening price with that level here. So that 420 level is the upper quadrant of that new day opening gap. So we've dropped down to 413. So we've been trading at 430s. We've dropped down to 420s, and now we're trading at 416. So trading at 414, 413s now, 412. So I want to see that 400 level, and then we'll see the reaction on that price. So this is a nice drop through that new day opening gap. So the way I try to predict price is getting a 20-point run in the direction of liquidity. That's how I determine where price is gonna trade to. So we're remaining with less than a minute, and then another 5-minute candlestick here is gonna come in. There we go. We've opened up right there at 416s. So I might as well annotate this price point here. So this new day opening gap, the exact midpoint is 29,398.6. 398.6. So let's annotate that here. 98.6. There we go. So the exact level is 420.9. So I'm going to take this line here, and I'm going to put it right there at 420.9, and then extend this out in front. Then we're going to make that dotted, that dark gray. So that is, make sure it's 20.9 as the upper quadrant, and then the lower quadrant here is 376.3. Right there. So I'm gonna remove that fib because we have all the levels here now. So we've traded on that upper quadrant, that 420.9 level. I don't want to see price if we're gonna be trading to this low here. I don't want to see price spend a lot of time on the upper quadrant of this new day opening gap. I just want to see it drop lower into that high of that steel blue area, and then trade into this lower quadrant, and then we're going to attack that sell side. So we're trading back up higher into 427. So trading at that 420 area now. I want to finesse this short here and sell it around that 420 level. Then we can expect that 400. So it's trading around 415. You can see the drop here. If we get that percent back into 420s, I'm going to be selling that. So 450 comes in here. 750, I mean. 450. Wow. 750 comes in here. 750 a.m. And then this is 755. And then this is the new 1 hour. 8. Beautiful. And this is 805. 805, this high is 428. I wish I would have finessed that into a sell and then expect lower prices. That's 419. So I'm gonna sell that 420 level, and then I'll expect price to trade lower. So you can see the reaction there. We trade down into 412. It's a nice reaction. And now we are 10 points in. We're trading at 410 now. So new 5-minute candlestick that 410. Back up again for 420 level. So I don't really expect price to start spending a lot of time on the upper quadrant of this new day opening gap. I just want to see it now reject that upper quadrant level, that 420 level, and trade down into 400. So you can see the drop again down into 411. So from 420, I want to take the 20 points around 400 level, and 400 is the top of that daily inefficiency. So let's watch it, how it's reacting here. So that's 410. So it's reacting like it does not really want to move away from that 410 level, but we're going to be a little bit patient. So it's back again at 415. I don't really like the way it's returning back into that 420 level. I just want to see a straight drop. So you want to be reminding yourself that we've been having bullish prices here, but then again, we've had weakness here trying to trade through that new day opening gap. So we trade back into this inefficiency here, straight away from the open. We've had this retracement here. I've wanted to see this price drop and trade back into these lows. So if you look at the 15-minute here, we've dropped a little bit lower here, trade back into this level here, and I wanted to see it drop away from that upper quadrant of this new day opening gap. So we dropped back into around 410, and then now it's retracing higher, something that I do not really want to see, and I don't want to see price spend an ample time on the upper quadrant of this new day opening gap. So I want to see it drop lower and trade back into this, at least this 400 level. So we've had that retracement again to 423s. A new 15-minute is coming up. So this whole week of this 15-minute range, I want to see it. If we open up the next 15-minute candle, I want to see it drop lower. So there we go. We've opened up a new 15-minute candlestick. You can see it's going through it. That's a nice drop down into 410 again. Nice 4.8 now. We're trading at 4.7. I want to see it get away. So at least we've had that drop again down into 4.9. Now I want to see that candlestick here go lower, at least into 400. So if you look at what we have here, we're back up again at 430, and it's really very difficult here right now. So the way it's behaving here, I think I'll just take the 10 points and be satisfied with that. So let's give it a little bit more time. So 4, 5, 4, 4, or 3. That's a nice drop. 2 and right. So I'm gonna take that. So that is how many points are these? So from 420, I've taken it out at 4. Those are 16 points. We can get a reaction from right there, and then it can start trading higher. But look at that, that's 400, and boom, right there. That's beautiful, right? That's a 20-point run lower. right there, trading back into the top of that daily inefficiency. So I've missed up on those 4 points, but that's good enough. So you can see the drop there. So that's a nice 20-point run from this upper quadrant of this new day opening gap, trading into the midpoint of that new day opening gap. Very nice 20-point run. So eventually you want to see it trade into this sell side. So runs like this here, looking for 20 points. That's what I normally look for in trading in the direction of momentum, trading in the direction of the PDR rate that I look at in this during this session. And you can see the reaction here. We've been trading lower since we opened up from midnight New York. We trade back into this inefficiency here. We've had this drop here. I've talked about how I did not really want to see price trade spend a lot of time on the upper uh, quadrant of this new day opening gap shade in rosy brown, and then we've had that reaction from that upper quadrant, that 420 level. I went in short there. I was aiming for 400, but got out that 44. So beautiful and nice run lower. And if we run this sell side here, I'll be satisfied with what it has done in this session, and we'll come back tomorrow and try to look for something else. So you can see the drop here. It's still dropping, trading at 384. If I could have held it from 420, right now I could have been in around 40 points in. So now that we've gone through, even through the midpoint of this range here, I want to see it now attack that sell side. So my entry was on that 420 level. You can see the trade here from that very small trading range here, gotten out at 4.4. So 16 points, not bad for this session. But you can see we've gone through even through the 400, and we've traded down into 380. So this is a nice drop here. So next, I want to see the sell side here, and then we'll close this up earlier today. Because this has been just straightforward price action here. We're trading at 394 because it's reacting higher now. So I want to see the reaction if it trades back into this that high. So you can see the 15-minute here weakness. We've opened up. It did not even have a week on the upside. It just dropped lower. So where is it headed? This low here, and this um, very small area of price action that was never traded while it was trading lower here. So I want to see. I'm looking at the reaction on that 400 level. So using this idea here of what price is doing here with momentum, with these concepts here, the new day opening gap, this daily inefficiency, this inefficiency. I mean, these things are in price. They are just straightforward. It's just the narrative behind them is the complicated thing, and you must spend time with price to notice these kind of things. So we've had a nice reaction here. So I want to see on the closing basis, where do we close here? So all it's doing right now, it's trying to engineer liquidity. This low here, you can see it's relatively equal with this one here. So I want to see where London open, especially that 9 o'clock candlestick that comes with volatility. It will be very interesting on where it trades to. So the 20-point run from this level here for 20, it's right here. Explained, executed on, but I got out early, 16 points. And that's just what I got for myself on this narrative here. So we've retraced back into 400 and 410, and I've said I want to see how it reacts on the closing basis with this level here, that 400 level. So we've gone through here, trade down into this candlestick low is 383, and now we are back up again into 48. So this candlestick here has retraced into 4 410, and now we've opened up this new candlestick here. It's trading again down into 300 on that 400 level. So I've talked about this level here, and I want to see the reaction of on price on that level. Remember that level is also so close to the midpoint of that new day opening gap. So we're trading at 4.8 now. You can see the reaction on price here. If you want to be waiting for that sell signal, you gotta have a lot of patience. And honestly, I'm a very impatient person, and you've seen it right here. I mean, price is going into the direction that I want to see it go, but you're getting out before even it reaches where you want to see it reach into. So that's a character trait of mine. I'm normally very impatient, so I'm looking for price move that get away very fast from my entries. So from where I enter, I want to see price drift in my direction. So we're trading at 410 again. So we can trade higher. Maybe we can touch that 420 level again, but I don't want to see it do that. I want to see it just drift lower now and trade down into this sell side. You can see we're down, we're back down again into 403 now. We're trading at that 400 level now. So we're trading right there at 400 again. So momentum is still in play for weaker prices. So anybody who sells that 420 level, we're still 20 points away from that level. We're trading at the midpoint right there at 400. So I want to see how it reacts and how it is gonna run into that sell side liquidity, that odd low. And now with the fact that we have that small space that was never traded, I want to see it run lower into that. So if it does not trade into that sell side the way I'm expecting, but it's going to trade into that. If it doesn't, then we'll start getting reactions on that 400 level. But the way it's behaving here, we're still gonna attack that sell side. So we retrace higher here into 410. This candlestick's high is 414, and then you can see we're down here at 400 again. So I wanted to see price run a little bit faster into this sell side here, but you can see how it's behaving here. Very, very slow. So you can see it's dropping down into 391 now. So you can see the reaction here. 15-minute chart. Let's look at this here. We have another week here. So this 15-minute chart closed right here at 403. We've opened a new one. You can see the reaction here. So all these weeks here, price is going to trade through them. It's going to them. Any retail trader was trying to buy this here, they're being crushed. So today was an easy 20-point run here. It was not like yesterday's price action. I explained yesterday's price action, but the whole time I was my microphone was off. Man. So we're trading at 395 now. I want to see how does it get into that 368 level. The real low is, this candlestick's low is 368.1. So we're trading on the midpoint of that new day opening gap. The time right now is 8:32. So we are remaining with around 20 minutes to 8:50, around 18 minutes to 8:50, and then we're gonna see the reaction. So again, momentum is still in play. We are posting here bearish prices, and I have a target that I want to see price trade to. Everything explained why I need to see price trade into that, and if we couple that with this ICT concepts of the premium here and the discount, and then you couple up with the momentum. There we go. You have a strategy. You have something that can get you into a trade on the profitable side. I want this real account to get, um, I'm aiming for 30, around 30, $34. And then I'm gonna buy a funded account and start trading that funded account with this concept here. So that's really it. So we're trading at 390. I want to see 380s, and then from 380 I want to see a drop down into that 37, around 3, exactly what was 368.1. So you can see the weakness here. Beautiful. So there we go. We've touched that 390 level. This candlestick's low is 383. So I want to see it going into that low here and then attack the sell sign. So I wanted to see a more protracted price action, but it's going low. It's bearish, but it's really I have faith that's gonna get there. So this is the kind of trades that in future when we have a new day opening up that is this way, we can have a new day opening up or we can have a new week opening up, and this is what exactly it does. But a new week opening up is has a little bit more, let me call it strength, and price normally trades to those levels with speed. But here you can see the new day opening up. It's going lower, like I've just highlighted. I've talked about it, but it's not really like it's fast, but it's getting there. So I want to see it get on the lower quadrant of that new day opening gap. That is 375.7, and then we'll see what kind of reaction do we get from there. So trading at 384 now. I think we've touched 380. The low here is 381, and we've gone below this low here. So I mentioned everything here, everything explained. I mentioned that I wanted to see it trade lower into that sell side, why it is important, and all those kind of things. So if it trades down into that sell side, we can have extrapolated. We have one level extrapolated. Yeah, we can have extrapolated price action that trades down into this range and into this daily inefficiency here. Let me extend this chart here. So we can have price retracing back into this range. So that sell side liquidity pool is also the Asian long. So beautiful draw lower, and I want to see it at least touch this lower quadrant of this new day opening gap. So we're trading at 387 now. So it's getting another reaction higher here, trading at 29,394 now. So what I'm thinking is we're waiting for that 850 to 910 macro, and then it's gonna run that sell side fast. From where we're trading at right now, I don't want to see a deeper retracement right now. I just want to see it remain weak and trade around this that 400 level and that 380 level. So you can see where we've closed right there at 394, 395. So I want to see it again, try to devour lower prices. So we're back up to 400 again. All it's trying to do is engineer liquidity. Because the lower lows, the lower low, not the lower lows, but the relatively equal lows here. Because the body here, this low, they're relatively equal. But to what price point? That sells at that 368 level. That's what we're gonna be trading to. So the time is 8:41, and you can see the rejection there. This candlestick here has gone to 407, and then we've got the reaction there to 380 now, 382. That's a huge run from 407 to 380. That's more than 25 points. And the low here is 382. Not touched really 380, but 382. That's 25 points. Exactly 25 points. So you can see the way it's pricing in lower prices. So we've gotten that 380 level. Yeah, very nice. So I want to see that 375.9 level, and next I want to see the sell side here. We can even trade into that sell side even before London opens. This has been a very nice reaction there. So I want to see it touch that price point. That is 375.9. The exact level is 376.3. So these are the kind of days that I like trading. So there we go. We've touched that 376, trading at 375 now. Beautiful. And I want to see it run to that sell side. So for the sake of completeness, this low here is the same as this on the 15-minute chart. So that's beautiful. So we're trading at 375 now. So it's a matter of time before we get into 366. That is 368.1. So this is the model found out here. One thing that really encourages me is this session majority of the time is gonna follow momentum. It's momentum based. So if we have momentum and we go and we know momentum is gonna be behind our trades, then I don't really have the fear of losing. The fear of losing strikes me once in a while. I mean, it has been crazy because of the time that I've spent trying to look for a way that I can be profitable doing this, and then it all has just been disappointment. And it's gonna. I think that happens to every trader, unless you are persistent enough. The more you f around, the more you're gonna find out. So, and this is what I found out. I found out that momentum on this time period here is mandatory, happens almost every day, if not every day. And if I have momentum behind my trades and I have targets that I want to see price trade to, and I can figure out how to get the best of the best entries, then that's a way to become profitable. So we've had price trade lower. You can see the reaction on top of this new day opening gap here. We have price trade into that very small inefficiency, and then it started pricing lower, and it has been pricing lower here very slowly, but it's getting lower. So the time right now is 8:45. We've opened up a new 15-minute candlestick, and you can see the 15-minute chart here. So I want to see it draw into this low here. I think we have 5 minutes to get into, actually less than 5 minutes until we get into 8:50. And then we're gonna see what the macro has in place. So it's not really a must that my exits are on that sell side, because I've seen price draw into liquidity pools but never trade to those liquidity pools. So I'm trading in the direction of the liquidity pools, and I'm aiming for 20 points. Of course, sometimes, and I've seen it a lot, it over delivers. It gets more than 20 points, but that fear of losing, that fear of waiting for price a little bit more, a little bit longer, and maybe it retraces against your positions. And I've mentioned the fact that I'm very impatient. It's crazy. You end up even lose exiting on a loss on a very nice trade. So this is the sell side. For completeness sake, let's annotate this. There. So we've traded down into 375, and then now we've retraced again back into 394 now. So we're remaining less than 2 minutes. The time is 8:48, and then that 8:50 macro is gonna come in. So we're gonna see what they push it to. So I'm gonna stay here for that macro that welcomes in the London Open, and then we're gonna see, does price trade through that sell side the way I've been saying they have been expecting, or does it have a huge retracement that goes on the upper portion of that new day opening gap, of which I do not really expect. So if it does go below the sell side here, that will be it. So we have from where we started here with this move, inside this inefficiency. I was not in front of price right here. I came in front of price after after it has traded around 30 minutes past. So I found this move here while it was around here. That is 340, 7:30 right there. 30 minutes past 7. So I found this move while it was trading around here. And I've been expecting price to trade in the direction of this sell side liquidity pool, this all low. It's a liquidity pool. And we've had this low around here through the new day opening gap. We've seen the reaction from that 420 level, that upper quadrant, trading into the midpoint. Beautiful. A retracement back into around 414 level, and then we've had that run low again down into 375. It's beautiful. So we've had this retracement here, and now we've opened up with that 850. So this is the 850 candlestick. So I'm looking at how does it react on that daily inefficiency high, that blue level. And if we're going to be trading into that sell side liquidity pool here and that very small part of a liquidity void, yes, there's a liquidity void. I want to see the reaction from right there. Remember, these are two price points here. Is the high of that daily inefficiency, and it's also the midpoint of this new day opening gap. So if it wants to run into that sell side, I want to see it reject from that level and trade into that low. So this candlestick here, it has traded to the high is 400.4. We're trading at 392 now. We've gotten a reaction from that 400 level. So we're 2 minutes in on this macro. Look at the time here. Look at that reaction from that 400, and now we're trading at 388. It's beautiful. Nice. See that reaction there? Down into 300 and 376. So 400 level, anybody who's been who was short at 400, that 380 level, they've been filled 20 points around there. It's beautiful. Beautiful run on 20 points. So we're trading at 381 now, and I want to see this sell side here being traded to. If it, I've talked about if it does this before London, it would be even better. Look at that reaction down into 375. So the second 5 minutes of the macro is around the corner. So I want to see it uh, run lower. So there we go. We've opened up that new 5 minute, and you can see it's still keeping up with the lower prices. So trading at 375. I want to see that sell side now. So time is 8:55. We're meeting with 5 minutes, and then London is gonna open. So 373. It's about time it gets down into that sell side, and I want to see it trade through it. Beautiful, beautiful. So trading at 370 now. So we touched 368. Then we go 368, 368.4. I want to say 368.21 now. Boom. There we go. And we've trade through that. So So that's it. Beautiful run lower. We're gonna open up in London in less than a minute now, and then I want to see extrapolated price action. Extrapolated. I want to see lower pricing here through that volume. It's not a volume. It's a liquidity void. Through that liquidity void, that small portion of sell side, I want to see it go through it. So we've traded into that 368 level. This candlestick's low so far is 364. Beautiful run into that sell side. So there we go with London. And we have a very small wick here on the 5 minute. I want to see it price. I want to see it trade through it. So you can look at a 15. If you look at this 15-minute chart here, I don't want to see price trade back into this wick here. It can do it maybe later on, but first of all, I want to see it go through this area here, and I want to see it respect, not respect really, but I want to see it trade through this 5 minute wick, trade through it, and put a candle through this range. So there we go. We're trading at 366 now. Look at that. 360, and the low of this new day opening gap, that is where we closed up yesterday. This closing price here is 353.8. So I want to see it trade to that 353 level. So this is London Open. So we've had a very nice and successful session here. I don't want to repeat what I've just talked about, this whole 1 hour and 18 minutes plus, other than to just encourage myself, and I know this is gonna repeat again in the future, so no worries about this. So this has been really it. I don't want to keep this longer than it is. I called out the sell side here. We've ran into that. That's all I'm gonna say. So that's really it until again tomorrow. Tomorrow is Friday, so we're gonna be looking at what we have going into today's price action, and then we'll see whether we'll have higher prices here. I'm talking about this daily chart. We'll see whether we'll have higher prices that trade back into this inefficiency, or we'll just trade inside this inefficiency. And we're remaining with 2 days until August closes. That is tomorrow and Monday. Monday will be 31st. So we look at this here. So we're trading on today on Thursday. Tomorrow it's Friday, and then Sunday, and then we have Monday's trading will close the month. So it has been really a nice month on momentum on this time period here, and I expect nothing more than price to do what it's expected to do. So you can see the reaction here on the 5 minute. We trade back into this low. So that's all I needed. And then I'll start taking my screenshots to save for back testing and future reference. So it has been really nice. I've really enjoyed this session. So until tomorrow, adios.